Imagine a floating city. A city made of steel, carrying everything you own, your phone, your clothes, the car you want to buy, and even the medicine you might need next week. Now imagine 150 of these floating cities, suddenly stopping dead in the water. This isn't a movie script. This isn't a prediction for 2030. This is happening right now. In the last 72 hours, a silent alarm has gone off in the war rooms of the world's biggest banks. While you were sleeping, something unprecedented happened in the most dangerous stretch of ocean on planet Earth. Official reports are calling it a logistical delay, but let's call it what it really is, a $400 billion freeze. We are talking about 150 massive cargo vessels carrying energy, food, and technology that have been forced to drop their anchors or turn around. They are carrying cargo worth more than the entire GDP of some small countries. And right now, they are stuck. Why does this matter to you sitting in the United States? Because the last time this happened, inflation hit a 40-year high. The last time this happened, you couldn't find basic goods on the shelves. But this time, the numbers are different. This time, the blockage isn't just an accident, it's a signal. Wall Street is trying to keep this quiet because they don't want panic selling. They want you to believe the soft landing narrative. But when 12% of the entire world's trade stops moving overnight, there is no soft landing. There is only a crash. Today, we're going to look at the data that the news isn't showing you. We will track the ships, follow the money, and tell you exactly how this maritime crisis is about to hit your bank account in less than 30 days. Welcome to the supply chain shock of 2026. Let's look at the map. When you look at the globe, this area looks small, just a thin blue line separating continents. But in the world of finance, this isn't just water. This is the jugular vein of the global economy. It's called the Bab el-Mandeb Strait. In Arabic, it translates to the Gate of Tears, and right now it is living up to its name for every major CEO in America. Here is the terrifying reality we often ignore. We live in a world of just-in-time delivery. We built a system obsessed with speed. But to get that speed, we funneled 30% of all the world's shipping containers through this one tiny, vulnerable choke point. 19,000 ships pass through here every single year. They carry oil for Europe, electronics for America, and raw materials for China. It is the busiest highway on Earth, and someone just put up a road closed sign. Due to the escalating risks, which we will get to, the giants of the ocean have made a drastic decision. Maersk, Hapag-Lloyd, BP, the companies that literally move the world, have issued orders to their captains: do not enter. Instead of taking this shortcut, these massive vessels are now being forced to sail all the way around the entire continent of Africa. Let's put that into perspective. That is not a small detour. That adds 4,000 miles to the journey. It adds 10 to 14 days of extra travel time. But most importantly, it burns millions of dollars in extra fuel for every single ship. So why does a ship turning around in the ocean matter to you? Because ships don't pay for that extra fuel. You do. When the distance increases, the supply drops. When the supply drops, the cost creates a ripple effect that travels faster than the ships themselves. We are looking at a logistical nightmare that makes the 2021 supply chain crisis look like a minor inconvenience. But here's the catch. The longer route isn't just expensive, it's slow. And in an economy built on debt and credit, slow is deadly. We are watching the arteries of trade harden in real time. And this leads us to the question that no one in the White House wants to answer. What happens when the cost of moving goods becomes higher than the goods themselves? Let's talk about the money. Let's talk about the inflation nightmare. They told you inflation was under control. They told you the worst was over. They lied. To understand what is coming, you have to look at one specific number, the freight rate. This is the cost to move a 40-foot metal box from Shanghai to Los Angeles or Rotterdam. 2 weeks ago, that price was stable. Today, it has vertically exploded. We are seeing spot rates jump by 100%, 200%, and in some specific high-risk lanes, nearly 300% in a matter of days. Now, you might be thinking, I don't ship containers, I just buy groceries. And that is exactly where the trap lies. You see, corporations do not absorb costs, they pass them on. When Nike pays triple for shipping, your sneakers get more expensive. When Samsung pays more for insurance to cross the ocean, your phone price goes up. When the parts for your Ford or Toyota take 2 extra weeks to arrive, the dealership marks up the price because of scarcity. This is what economists call cost-push inflation. It is the silent thief. It doesn't rob you at gunpoint, it robs you at the checkout counter. Think about the timing. We are entering 2026 with a fragile economy. The Federal Reserve has been desperate to lower interest rates to save the housing market, but they can't cut rates if inflation spikes again. If this shipping crisis pushes inflation back up to 4% or 5%, the Fed will be forced to keep interest rates high. That means your mortgage stays expensive. That means your credit card debt keeps growing. That means the soft landing they promised is actually a brick wall. We are already seeing the early signs. Insurance companies have hiked war risk premiums by 10-fold overnight. Ships are literally paying a danger tax just to float. And guess who pays the danger tax in the end? You do. The scary part isn't just the price hike, it's the stickiness. History tells us that when corporations raise prices during a crisis, they rarely lower them when the crisis ends. They have found a new baseline. So your paycheck stays the same, but the cost of survival has just been recalculated by a shipping clerk halfway across the world. But what if this isn't just about bad luck? What if this choke point isn't being blocked by accident, but by design? What if someone wants the prices to go up? Let's look at the players in the shadows. This brings us to the twist no one is talking about. In war, we are used to seeing tank battles and fighter jets, but the rules of engagement have changed. We are witnessing a new kind of conflict, economic attrition. Think about the math for a second. This is the part that terrifies the Pentagon. To stop a ship, the groups controlling the Red Sea are using drones that cost maybe $20,000 to manufacture. Cheap, simple, effective. To shoot down that $20,000 drone, the U.S. Navy has to fire an interceptor missile that costs $2 million. Do you see the asymmetry? It costs them pennies to disrupt the system. It costs us billions to defend it. This is a financial trap. This is not just about blocking a canal. This is about leverage. The powers behind this blockade, and we know who backs them, have realized something crucial. They don't need to defeat the American military to hurt America. They just need to make America bleed money. By keeping this trade route closed, they are holding the global economy hostage. They have their hand on the thermostat of Western inflation. They turn the dial up, and prices in New York, London, and Berlin skyrocket. It is the weaponization of trade. And here is the deeper analysis that most experts are missing. This blockade forces the West into a lose-lose scenario. Option A, we do nothing, and supply chains collapse, causing a recession. Option B, we escalate militarily, spending trillions of taxpayer dollars on another conflict in the Middle East, which spikes oil prices even higher. Either way, the dollar weakens. Either way, the debt pile grows. This is a game of chess where your opponent is willing to sacrifice a pawn to take your queen. And right now, the global supply chain is the queen on the board. But while the governments argue over strategy, the real damage is already happening on the ground. The ships aren't just carrying stuff, they are carrying the specific components that keep our modern life running. We are about to see shortages in things you wouldn't expect, things you need. Let's break down exactly what is missing from those containers. We often talk about the economy like it's just numbers on a screen, but the economy is physical, it is tangible, and when the ships stop, the physical world starts to break down in very specific ways. We have analyzed the manifests of the vessels currently stuck or rerouting. Here is what is likely to vanish from the shelves first. Number 1, the energy spike. Millions of barrels of oil and liquefied natural gas usually flow through this canal daily. With tankers diverting around Africa, the delivery of energy is delayed by weeks. The oil markets hate uncertainty. We aren't just looking at higher gas prices at the pump, we're looking at higher heating costs for your home right in the middle of winter. Number 2, the pharmacy crisis. This is the one that keeps experts awake at night. A massive percentage of the raw ingredients for generic medicines, antibiotics, painkillers, insulin components come from India and China to the West. They travel through the Red Sea. We are already hearing whispers of supply constraints from major pharmaceutical distributors. If you rely on specific daily medications, the supply chain just got 14 days longer and 20% more expensive. Number 3, the auto industry freeze. You might remember when used car prices skyrocketed because of chip shortages. Get ready for round 2. Major manufacturers like Tesla and Volvo have historically had to pause production when this specific route gets choked. Why? Because a car is made of 30,000 parts. If one gearbox component is stuck on a ship off the coast of Yemen, the entire factory stops. Fewer cars being made means higher prices for the cars that are available. Number 4, electronics and batteries. Everything from your smartphone to the lithium batteries in your tools relies on a steady flow from Asia. The delay doesn't just mean you can't get the new iPhone, it means the repair parts for the technology you already own become scarce. This is the reality of a fragile system. We traded security for efficiency. We wanted cheap goods delivered yesterday, but now we are paying the price for that addiction. The shelves might look full today, but the warehouse behind the store is running on fumes. The gap between in-stock and out-of-stock is closing fast. So, with inflation looming, goods vanishing, and the world on the edge of a wider conflict, what can you actually do? How do you protect your wealth when the system is flashing red? Let's talk about the end game. Let's talk about survival. So, where does this leave us? We need to be honest with ourselves. The era of easy globalization, where we could rely on cheap goods flowing seamlessly across the world, is ending. We are entering a decade of fragmentation, a decade where geography matters more than efficiency. The Red Sea freeze is not just a news headline, it is a warning shot. It is telling you that the system is vulnerable. If the supply chains break and inflation returns, the dollar in your bank account loses purchasing power every single day. So, what is the smart play? How do the wealthy protect themselves in times like this? First, tangible assets. In a world of paper promises and digital debt, physical assets become king. This is why central banks around the world, especially in the East, are hoarding gold at record rates. They know that if the shipping lanes close and currencies wobble, gold is the only insurance policy that has no counterparty risk. Second, the personal supply chain. This sounds simple, but it is the most practical advice you'll hear today. If you know you will need a new car, a new laptop, or essential medications in the next 6 months, do not wait. Buying now is a hedge against the price hikes coming in Q3. The best time to prepare for a shortage is before the panic begins. And finally, stay liquid, but stay alert. Cash is useful for emergencies, but in a high inflation environment, cash is a melting ice cube. The goal is to survive the volatility. Watch the Federal Reserve. If they mention supply shocks in their next meeting, take it as confirmation that the situation is worse than they're admitting. History favors the prepared. The world is getting more dangerous and the financial waters are getting choppier. You cannot control the geopolitics of the Red Sea, but you can control your own household economy. We are watching these shipping lines 24/7. As soon as the next major domino falls, whether it's a new blockade or a sudden price explosion, we'll be here to break it down. Do not let the algorithm hide the truth from you. Make sure you are subscribed and have clicked that notification bell. You need to know about the next crisis before it hits your wallet, not after. Stay safe, stay prepared. I'll see you in the next one.